What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol TTCF for Tattooed Chef Inc. On the left-hand side, we are looking at the daily time frame, and on the right-hand side, the 30-minute intraday time frame. This will be more of an update since we did cover this one recently. It was before the earnings announcement, so let's see what has happened here. Well, obviously, the elephant in the room is it did move lower, and it's coming into our 1650 area of support. If we scrunch this out, you can see that's what we had mapped out from this prior double low, and I would argue the next major one to watch out for is 16, the whole dollar. Keep that on your radar. And of course, then 1550. These are just simply coming from this move to the downside here. Looking left beyond that, what do we have? Well, that sort of coincides there. I would sort of go to this one, so 1450, excuse me, there as the next major area of support. Now, I'm not saying it's going to get there, but I do want you to have some levels underneath if a more serious down move starts to develop. Not that one hasn't started developing already. Anyways, those are the levels to watch out for. To the upside, if there is any sort of reversal, we need to focus the attention over to the 30-minute time frame chart to map out what the next major point of contention could be. So if we reverse out of this 1650, what are you watching for to the upside? Well, certainly prior support should act as resistance here at 1713, and then this is a very obvious dead cat bounce high around 1778. So any reversals, any sort of hammer candles that print down here, if you do decide to take it long, stop obviously goes underneath, long over the highs. Your targets are mapped out. We have 1713, and after that 1778. So that's how I would think about this. If there is any sort of dead cat exhaustion bounce after this really substantial move to the downside, right? This has been pretty nasty, a pretty aggressive sell considering that we're trading something sub 25. This is not something to just write off as nothing. This is a massive percent move, right? So if we just take out our Fibonacci's, this will be kind of the last thing we do before we wrap up the update. Go from the high here to the low. We talked, or no, we didn't talk, but we went to the 38.2. That is visible there, but now we've since closed underneath, so we'll go ahead and remove that one and instead do something like this to just generally analyze this down move that has started since the earnings gap down. So if we get any sort of retracement back into the range, we know 1713 is the first number to watch, and that's actually before our 38.2. So that's interesting that resistance based on structure could come in before the Fibonacci number. So if we do something like this, we might not even make it to the 38.2, which we know is the critical area or healthy area of pullbacks when we're looking at buys to the upside. And in terms of downtrends, this would be where you'd want to be a short, looking for continuation back to revisit the low of the move. So all things considered, this chart is not looking so hot as it sits right now. Again, given the nature of the quote unquote oversold, remember things can remain oversold. They don't have to just snap back if some indicator you're looking at reads as oversold. But if there is some sort of snapback, I wouldn't be surprised, right, to see some sort of maybe green candle that forms down here, a little indecision doji, some sort of pause, some sort of breath for the sellers before they potentially continue this to the downside. So you have my thoughts here. I wouldn't be wrapped up long right now. I also wouldn't be trying to go short simply because of the amount of daily support we're coming into. It just doesn't make sense to try to go short and looking for something like this. Instead, be on the lookout for those reversal candles, as we've discussed. Anything that would make you imagine that the trend is starting to reverse as soon as we start to put in those higher highs, higher lows, flip long. That's fine. You have those targets mapped out to the upside. But for now, you know my thoughts. You know how I'm thinking about this going forward, and that's all that matters. So if you enjoyed today's video or you learned anything new, let me know down below in the comment section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, we wish you a green trading week.